I'll tell you a little bit about Mr. Andrew Mwiima. He's an investor resource person at Capital Markets Authority, and he has been since 2014 to date. He has previously worked as manager, trading and research at Uganda Securities Exchange. This he did between 2012 to January 2023. He has also worked as risk specialist at NSSF. He's a seasoned and passionate investor in stock markets. He has invested at the Uganda Security Exchange, Nairobi Security Exchange, and Rwanda Stock Exchange. Join me to welcome Mr. Andrew Mwiima. Over to you.
I'm extremely humbled to speak to you all in your different capacities. I stepped in for Joseph Lutwama, a friend of mine, and I've given you a brief of my bio. I've participated in financial markets or the capital markets very actively since 2003. I know we are at different wavelengths, but for today you will allow me to assume that we are all beginners. So I will present an account as a person who has benefited, as a person who has also lost some money in the capital markets industry, as well as having some academic background in the same. As my host introduced, I really build up from where Gloria stopped. She gave us a very interesting and good foundation about how we as believers, members of the church, we need to be good stewards of money. And like she emphasized, it's not that we work hard and buy that land and build rentals. There are so many other things we can actually put this money into. And these include the financial markets. Before us is a screen of a trader. For those of you that could be sophisticated enough, you imagine that capital markets or stock exchanges include graphs, include numbers, and it's true. Just my immediate former job, I was overseeing trading, so these things were familiar. Somebody at a certain time trying to buy or sell shares, just to put it into perspective. Now, the capital markets as an industry is a subcomponent of the financial markets. So in this industry of ours, we have so many stakeholders or different institutions. We have the Bank of Uganda, which is a central bank. It actively participates in this industry through the issuance of the bonds and bills. These are for monetary policy purposes as well as managing foreign exchange aspects like we shall see in context. Then we have the insurance players. These may include issuers like National Insurance and Jubilee. However, some of them, if you notice, have taken up the trend of fund management. You find them offering unit trusts and related services, which we shall also speak about as we go on. Then we have securities exchanges or stock markets, which are the actual operational places where people are able to buy and sell these different investment instruments. We also have the stockbrokers, investment advisors, and others. We also have core investors in the retirement benefits providers. These are usually the largest investors, especially from the institutional arm, such as NSSF and the number of provident funds which we have. Now, like I mentioned, CMA in itself is a regulator, but the place where the actual transacting takes place is what we call the securities exchanges. So a securities exchange is simply that market where different financial and invest across the world. You can find shares. Another word for share is a stock. You find treasury bills and treasury bonds, commercial paper, municipal bonds, commodities, derivatives, currencies, and the list goes on and on. Because this industry actually evolves. Where we are headed, these paperless things we hear about are actually going to be real. Yeah? So before us in the background are brokers, most likely on the Chicago Mercantile Exchange, trying to trade in commodities. So if you ever watched TV those days and you used to see people in red and green, blue, those are actual brokers who are trying to transact. But to help us understand these investment instruments, I thought that we could start with a foundation of understanding why in the first place Airtel, for example, would wake up and say, I want to sell shares, or MTN. Or why does the government of Uganda wake up and say, I want to issue a treasury bill or treasury bond? Now, our core role as an industry is to assist institutions to raise finance. This can be debt, it can be equity. Those of us on this call with an accounting background, we could have come across that basic equation. Assets are equal to liabilities and equity. It simply means that as an institution, you can raise finance using either debt instruments or what we call equity. If you walked to Standard Chartered Bank borrow as an individual, it's called a loan. Even if you go as an institution, as a company, it's called a loan. However, if your institution walks to the capital markets or the stock exchange to borrow, that loan becomes what we call a bond. If it's the government which is borrowing for a short period of time, that loan is what we call a treasury bill. Short term in our sense means it's for 3 months, 6 months, or 1 year. Governments can also borrow for a long period of time. I'm sure, like Gloria has told us in the past. Long term in the Ugandan context starts from 2 years up to 25 years. Those are what we call treasury bonds. So we also have what we call medium notes or treasury notes, but anything beyond 2 years is a treasury bond. Across the border in Kenya, their longest bonds are about 50 years. Then countries like Germany, which are advanced, have treasury bonds up to 200 years, but you borrow for a long period of time. So those are what we call treasury bills. On the other hand, if Peter has a business, a private business, I know some of us on the call are businessmen and women. Like I mentioned, assuming it's Peter and Sons and it's a chain of restaurants across maybe Teso region. If Peter and Sons goes to Stanbic to borrow, it's still a loan. On the other hand, if they go to the stock exchange, it becomes a commercial paper if it's short-term in nature, or a corporate bond if it's long-term in nature. So you have alternatives, especially if you're some form of institution, on the choices of funding you can access through the capital markets. Now, these places will come from the districts such as Mbarara, Mbale, Gulu, Masaka. These districts can also issue what we call municipal bonds. Yeah, so they have needs for cash, maybe to build markets, to build roads, to build abattoirs, and the different projects they want to undertake as districts. They can issue what we call municipal bonds. Now, one of the biggest distinctions between the bonds and the ordinary loans is that unlike the loans where you pay back interest every month, back every 6 months, then historically the rates have been low. In my time at the exchange, the highest interest rate was 14%. You discover that some of the largest issuers of corporate bonds, for instance, are commercial banks. They can borrow cheaply at maybe 10 and lend expensively to the public. But these bonds, it's an avenue or source of raising finance for the business men and women on this call. Then we also have what we call equity. Equity is that form of financing which is accessible to institutions as well. An institution can still be a government or a company. If you're to look at the background of the Capital Markets Authority, established around 1996, thereabout, as CMA, then the Stock Exchange around 1997. But these were started at around the time the government was privatizing. So government needed to create a market where some of its old parastatals could be sold to the public and private investors. I imagine most of us are old enough to remember that large bank called UCB, which is a Stanbic bank we see today. So as government was exiting UCB, the shares were eventually floated on the stock exchange to give us the Stanbic we see today. Even Uganda Electricity Board, though the ownership kept changing, but eventually it's the Umeme we see today floated on the stock exchange. National Insurance Corporation, DFCU, New Vision, and the list goes on and on. So government, it needs where shares can actually be sold. Of course, after that, some private and a number of cross-listed companies across Kenya also came on the stock exchange. When you sell shares in your business, you're inviting the public to become part owners in your company. Of course, it's not for free. It's not for free. So Peter just can't come and say, hey, I'm Peter, the tallest man in Jubilee, give me shares. Surely he would be chased away with some chiboko, you never know him. But to get that ownership or that stake, you part with cash. That's why around these times, you could be hearing Airtel saying, buy at least 250 shares. Minimum is around 100 shillings a share. So you part with close to 250,000 shillings to become one of those pioneer shareholders in the company. All that money which is collected goes to that company. It's what we call equity finance. It's not a loan. You invite people to become part owners in your business. So that exchange, become an owner, but you part with cash. It's what we call equity. So equity does not compel a company to pay interest back to shareholders. We shall see the benefits as we proceed. Uganda Securities Exchange, Tanzania has declined a bit to 60. Rwanda has about 12, the Chinese 3,000, India close to 10,000. Just that tells you that in the developed countries, entrepreneurs, the businessmen and women, have a larger appetite for equity at that time, the interest of time. Why equity is better sometimes, the capital. MTN was able to raise close to 700 billion shillings in 2 weeks, rather in around 2 months. Secondary offers they did, able to raise. So the capital is usually large. Then business continuity. I think that one is very key. If we had the chance and I asked you people listening in to name one company started by any of us, maybe Okero, Mugisha, Mukasa, one company that is over 70 years old, started by an indigenous Ugandan, you would raise your head. But if you're to look at the age of Pepsi, Toyota, Coca-Cola, Barclays, Stanbic, most of these institutions are in excess of 120 years old. One of the reasons why they have been able to stand the test of time is because perhaps out of foresight, the founders of these companies discovered that if I could sell these shares, even if I sell 20% or 40% to the public or private people who share the vision like mine, every time there will be consistent innovation, and this company will end up surviving longer and longer. I believe in the research I've done. If you ever want your company to outlive you, to outlive your children, to benefit your grandchildren, think about sharing part of it. You sell a portion of it, maybe through private equity or even public equity. Your descendants will all benefit from it. There are some secondary functions of the capital markets, commodities. Once in a while, if you watch CNN or Al Jazeera Business, you sometimes observe them mentioning about how the barrel of oil has fared or gold has fared. You're able to buy some of these instruments, which could take forms of futures, exchange-traded funds, or even derivatives through the stock exchanges. So you don't need to own a vault of gold, but you can participate through futures, currencies, or even spot instruments. You get exposure to commodities. I believe some of us here still trade. You go to Movende, buy maize, come store it somewhere. Now you may not need to go through that whole war. You can simply look for an exchange where commodities are traded, either spot or derivatives, and you get that exposure. You buy the paper, lock in a rate at which you want to exit, assuming you expect the price of coffee to grow to 5,000. A futures contract simply allows you to lock in that rate, yet actual delivery will happen in the future. So if you know in your mathematics at 5,000 shillings a kilo, you will be making money. You buy that contract, sell it off in the future. Shall leave it at that. Then just for those of you that may be keen on investing across the globe, we have these instruments that are very core for you to tell whether an economy is good for you to put in money or to run away from it. The time we did this slide, it was around the time of the Brexit. So some events are perceived very badly in the financial markets industry. I believe that's why you could have heard that sometimes if a crisis even happens in Russia, it can have an impact on the investments in the financial markets in Uganda. So like you can see, most of the indices of of the stock markets were in red. That was purely a bad sign that the markets perceived it badly. Similarly, if you're watching Mr. Malcolm Musime on NTV Business News and you see red, that arrow pointing downwards, it's usually an indication that on the market things were not good. So if you want to put money in Rwanda, for example, and it's consistently green, consistently moving up, it's an indication that it's a good place for you to put your money in. Let me quickly conclude. A share is simply a unit of ownership in a company. If you buy shares in Airtel, MTN, or Stanbic, these are some of the benefits you will enjoy. These companies pay you dividends periodically. The telecoms pay you these dividends on a quarterly basis. Mwiima has been paying twice a year. Then most banks pay you once a year, but it's that nice passive income you can receive, especially if you're not able to maybe manage side businesses. You can buy shares in these different companies and earn that money periodically. Shares are like land, they grow, they appreciate in value. If you're to look at this slide, it's a little bit historical. The statistics are a little bit historical. Those who bought shares in Uganda Craze at the IPO, the share was 4,000 shillings. If you're to factor in the stock splits and bonus issuances they made, people walked away with a return on investment of 225%. I know we are Christians on the call, but I will still use the example of BAT just for illustrative purposes. The share started trading at 1,000, but had you sold it around the 1 shillings, meaning that investors at close to 15 years, assuming you bought and did not sell. So Bank of Baroda, one of the best performers, around 1,316. You buy at 600, you exit at an equivalent of 8,500. Now, if you're to look at examples across the border, KCB has given investors an average return of 2,660% since 19. Assuming somebody bought, kept it up to this time and sold. Housing Finance Bank Kenya close to 7,675. Equity Bank close to 1,000. Yeah, so shares can give you growth or capital gain. Then you don't need a lot to start buying shares. With as little as 5,000 shillings, you're able to buy. It's a problem we have in our mindset. People out there, you need tens of millions of shillings, but the share of Stanbic Bank is only 25 Uganda shillings. Uganda Craze is around 15 Uganda shillings. Bank of Baroda recently did a rights issue. It's also at about 14 shillings. Quality Chemicals is at 60. Mwiima 400. According to our laws, at least afford one share. So that 5K can buy for you close to 200 shares of the largest bank in Uganda. The rest you really do the math. You may want to access credit from banks. Most of these shares are accepted as security or collateral for you to get loans. Then they help us to save. For those of you that are parents, if you may recall, 35 years ago, for me when I was joining school, primary fees was only 7,000 shillings. about that 20 something, because it was a government schools. Then secondary, around 100,000. Today, to educate a child in a nice nursery school, you part with 700,000 to 1 million. So one way you can prepare for our children, you buy for your daughter and son shares with on a regular basis. This stand you see today, every time it grows, that 25 will eventually become 20,000. The MTN we see today, if it's now at time is really spent, but you buy shares of a long period of time. If you hold on to them, besides the dividends you will be earning, one day they will grow and your net worth will also improve. Then for the businessmen and women, they are entrepreneurs like Bill Gates, Jeff Bezos, Dangote. These guys have listed companies. You start your business, grow it, but sell a stake either to a private equity investor or public investors. Every time you will grow, that stake which you kept will keep growing and help your net worth or wealth to grow. If you're to look at this chart, had you been able to invest $1,000 in Microsoft in 1986, it would have grown to 1.6 million US dollars as at 2018. That tells you that Mr. Bill Gates did not sell 100% of Microsoft, but he kept selling some. And whatever stake he retained grew close to 160,000% after those many years, and he still has shares in his own company. Just a disclaimer, like we shall see this chart, stocks in particular are volatile. They rise and drop. So it's not for the faint-hearted. It's okay. I've lost money in the beginning. Many have cried also, but we shall see on the things you can do in order to have a fair performance. For those that are risk averse, God made you and you fear losing money so much. If you drop a 500 shillings coin, you read from the book of Lamentations, you cry, you're not happy with anybody around you. It's normal. And people like you are encouraged to think about the treasuries, the fixed income instruments like we saw. You will receive that interest every 6 months. It's also an excellent investment for you if you're in the retirement phase. Like you can see, the curve is a little bit smooth. It's defined like Gloria told us, you will earn your 16, your 14% over time. For those of us that also lack the expertise, the unit trusts, in addition to what we are told, you simply trust a professional fund manager like UAP, Britam, Sanlam. Now, these guys collect money from different investors. Some of it is placed in shares, some of it is placed in bonds, some of it is placed in fixed deposits. Of course, it's also evolving. Where we are headed, you will find those which invest for you in real estate or invest for you in foreign currencies. The biggest advantage with unit trusts is liquidity. If you have a crisis on Tuesday, you can call your fund manager at 9 and by 2, they give you your principal if you want the whole of it. So unlike the land and the rentals, if an emergency really happens, you may not easily sell your land quickly. Then interest is earned on a daily basis. Since your money is spread across different assets, there's instant diversification. Then you don't need a lot to also invest in them. For you to invest in any of these instruments, all you need to do is registration. It's usually free of charge. You need a national ID, you complete a form, and the rest of the information I will give you. Some words of wisdom as I close. It's important to speak to investment professionals. I know some of us here are doctors, maybe you're a dentist, even matters of finance than the ordinary ones. You may want to maybe get capital for your business. You may want to undertake a particular investment project or educate your child up to a certain level. You simply sit with these advisors. They will guide you on the do's and the don'ts. Have a long-term perspective. Capital markets do not have Kagwirawo. They just gave us those examples. We like quick money as Ugandans, and that's why however much we educate, another scheme is going to come and people are going to put money there. But for you, have that virtue of patience, long-term perspective. Capital markets will basket, my personal testimony, but we are out of time. The wisest person, you have that rental, have that unit trust, have some shares, rear that chicken, such that if one maybe affects you wrongly, the other can pull you up. Start slowly, like I mentioned, with as little as 50,000 or 20,000, you're able to invest in most of them. In case you can't do some research, and as I close, as the Jubilee Fellowship, if you're to study that parable of Matthew 25:14, the parable of talents, I think is how we use the money. If God gave you a talent as a teacher and you're always complaining, then he won't be happy. So we need to get that money from the different things we do, and opportunities arise to invest in God's kingdom directly or indirectly. We are able to tithe. One of the things that can ease that pain of tithing is, of course, through investing. Many people in the church, when you tell them, let's do this project, let's tithe, they keep saying, I don't have enough, I don't have enough. But sometimes it's because we are not very good stewards, even of the little. We have. Ladies and gentlemen, thank you so much. Let me leave my phone call. Once, in case you can, we go across the country educating people. I can always be available to speak to your teams. Thank you so much. God richly bless you.
If you're able, please do give. There are several ways you can give. We will share those at some point. Yes, there it is on the screen. You can give through mobile money, or Momo Pay. You have an opportunity to either use Airtel, or you could also directly deposit in the bank at Equity Bank. The details are on the screen. If you have been blessed this season, let's support UJN to keep doing this.